In just 7 days, money flowed into Ethereum ETFs that had left Bitcoin far behind. Almost $3 billion were poured into Ethereum funds, wiping out the competition. Hello and welcome back to Today in Finance. In this video today, we'll break down what exactly happened, why so much money is pouring into Ethereum, how it compares to Bitcoin's performance, and most importantly, what does it all mean for investors like you and me? Don't worry, we'll keep everything very simple, so even if you're new to crypto, you'll understand each and every step. So without further ado, let's get right into today's video. Over the past week, Ethereum exchange traded funds, or what we commonly call as ETFs, attracted an incredible wave of investment. In total, nearly $3 billion were poured into Ethereum ETFs, leaving Bitcoin ETFs behind in the same period. This is remarkable because Bitcoin has long been seen as a leader of cryptocurrency investments. It has been the default choice for retail investors and many large institutions. But now, Ethereum is definitely stealing the spotlight. The comparison this week is striking. Bitcoin still enjoys a huge market share in the crypto world, and for many people, it's the first thing they think of when they hear the word cryptocurrency. But in terms of ETF inflows for the past week, Ethereum is surged ahead. That doesn't mean that Bitcoin is slowing down suddenly. It still has billions in assets under management, but the momentum is clearly on Ethereum's side right now. Several factors are driving this wave of investment. First, there's growing institutional interest. Large investment firms are seeing Ethereum not just as a cryptocurrency, but as the backbone of a vast blockchain ecosystem. Ethereum's network powers smart contracts, decentralized applications, NFTs, and a huge chunk of the decentralized finance space. Second, Ethereum offers staking rewards, which allow investors to earn passive income by helping secure the network. This is an entirely different incentive compared to Bitcoin, which doesn't have a built-in staking system. Third, recent positive developments, whether it's technological upgrades to the Ethereum networks or signs of regulatory clarity, both have boosted investor confidence. When big news breaks into the crypto space, money can move very quickly, and that's exactly what we're seeing here. Large inflows into an ETF do not just benefit the ETF itself. They often push up the price of an underlying asset. When billions flow into Ethereum ETFs, fund managers have to buy large amounts of Ethereum to back the ETF shares. This creates buying pressure in the open market, which can definitely push prices even higher. It can also trigger a chain reaction. As prices rise, more people want in, which can lead to even more inflows. And the cycle continues. Diversification is more important than ever. Crypto markets move quickly. One week Bitcoin is leading and the next Ethereum takes the spotlight. By holding a mix of both, you reduce the risk of being overexposed to one asset's ups and downs. Diversification gives you a safety net. If one asset's price drops sharply, the other could help balance your portfolio. It's not about choosing a winner every week, but about building steady long-term growth. Don't chase the hype blindly. Big headlines about Ethereum's ETF inflows can be exciting, but that doesn't mean you should rush in without a plan. The market can turn just as quickly in the opposite direction. Always invest based on your own research and understanding of the asset, not just because it's trending. Following the crowd without knowing why can lead to costly mistakes. Understand the different roles of Bitcoin and Ethereum. Bitcoin is considered a store of value like digital gold, while Ethereum is more like a platform for building decentralized apps and financial tools. These differences mean they respond to market news in unique ways. Understanding this can help you make better investment choices when deciding how much of each to hold. The recent inflows into Ethereum ETFs suggest investors see strong potential in its broader utility. Watch for the ripple effects of big money moves. When billions flow into Ethereum ETFs, it can create buying pressure that pushes the price up. This can spark more investor interest and bring more money into the market. But remember, this momentum can also reverse if large investors start selling. Keep an eye on trends in ETF inflows and outflows. They can be early signs of where prices might move next. Now, the big question is whether this surge in Ethereum ETFs will continue or not. Well, if institutional investors keep piling in, Ethereum prices could see a sustained upward pressure. On the other hand, crypto markets are known for volatility, and regulatory changes and any negative news could quickly slow down this momentum. For now, the number speaks for themselves. $3 billion in Ethereum ETFs in just 1 week is not something that the market can ignore. Whether you are a crypto veteran or just starting out, this moment is worth paying attention to. So this is all from my side for today. I hope you found this video helpful, and if you do, make sure to give it a big thumbs up and subscribe to my channel for more financial insights, and I'll see you tomorrow with another fun yet informative video. So until next time, stay tuned.